Hello, this is Manesh Patel from the EII Capital Group. This is September 26, 2010. This is a weekly Ichimoku analysis for the currency market, Forex. Okay, before we begin, this is our normal disclaimer. This is for educational use only. All charts are in Thinkorswim Trade Station. The music you're hearing is guitar in the background. Okay, here are my contact details. You can follow us on Twitter, Ichimoku Trading. So let's begin and let's go look at the heat map as we normally do. If you haven't seen the heat map or listened to other previous videos, basically the way heat map works, it's a rating system um, where basically we're looking for 5 to 8 being bullish, -5 to -8 being bearish. Okay, and what we've done is we got two time frames here, and what we're looking for is a rating where both the ratings are very similar. So 5 and above for bullish and -5 and below for bearish. Okay, and we're looking for that on both the time frames. So if you're an intraday trader, you could trade with a trend. If you're on a longer time frame like daily, weekly, you could trade with a trend too. Okay. If you're a counter trend player, you're going to be looking for discrepancies these numbers and looking even for a higher time frame to influence the other or vice versa. Also, if you're a counter trend player, you're going to be looking for everything being at the extremes. So you're looking for both the weekly and daily being at 8, and then start looking for signs on the daily to start going the other way. Okay. So if you look here, Euro USD, it's in conflict. We'll look at the Euro USD because that's our normal reference point for every week. Pound USD, you could see that basically the weekly is now getting strong since the daily is influencing it. We'll look at that one. Australian USD, it's at the extremes being bullish. Okay, so if you're a counter trend player, you could look to see maybe where you could go short on that on a daily or some smaller time frame. New Zealand USD, there's conflict. Australian CAD, you can see the CAD is very strong here. On the US CAD going down. US Switzy strong against the dollar here. Remember a couple of weeks ago, Switzy and yen were very, very strong. And you can probably see from here on, against the dollar, they're still very strong. But against other currency pairs, they're weakening now. For example, here in US yen, it's still very strong. But look at the euro yen. This was both at -8 a couple of weeks ago. Now look what's happening. The euro got stronger compared to the yen. Okay, so there's some discrepancies now starting to happen between the yen and all the currency pairs. It's still very strong against the dollar, but not strong against the euro. So that's pretty interesting to see. Pound yen, there's discrepancies there. Australian yen, Australia was always strong against the yen. Now look what's happening on the weekly time frame. The yen get a little stronger against the Australian. Okay. Euro pound, there's discrepancies there. In fact, the daily's at extreme, and it's now starting to influence the weekly. Euro Switzy's getting weaker against the euro. Australian Switzy, Australia was always strong compared to the Switzy. That's starting to weaken up a little on the weekly time frame, so a pullback probably happened, and now it looks like it's starting to continue again the trend. Pound Switzy is still very is bearish. Australian CAD, if you look at it, it's still very, very bullish. That's an extreme one that's been at bullish for the last couple of weeks. And then Australian New Zealand. Okay. We're going to add another one here. Reason why is we're looking at this one a lot right now. I'll have to do it when TradeStation comes back online. But anyway, so let's start looking at the charts. And let's go look at Euro USD on a weekly time frame. And if we zoom in, if you look at last week, we had basically said this was a resistance level we're looking at. Look what it did. It got right to that resistance level of 3507. Okay. Remember, last week we could not tell if this bar right here was a pullback. This action was a pullback to go higher or was a pullback to go lower. This week is telling us now that this is a pullback to go higher. Okay. However, if you notice the price action that happened, it happened at extreme. So what happened last week, there was a huge price movement and we came straight to a resistance level within one bar. Okay, that's not good either. Reason why is, remember, trends don't occur with big gaps and big price movements. They initially do to start off the trend, but within the trend they don't do it that way. But probably that's what's needed to break this resistance level here, which it did. Now let's key what's going to happen here. Remember, this sentiment is still bearish, okay? So this is a counter trend play on a weekly time frame to go bullish. Because the Tinkinson Cajuns are bullish, but everything else is bearish, but they're weakening, okay? My guess is now that we got to this level here, once we get there completely, we're going to bounce off that. We'll probably go back to 32.84, and then a decision's going to be made whether we're going to sit there and try to go higher and get this next level of 37.94, or we're going to continue to go lower to retest this low. My guess is we're going to go higher, but we're going to come back here to the 32.84 and go higher. Okay. Next currency pair, which we've been recommending on Twitter, is Pound USD. If you look at Pound USD, it's a nice little trend. We had talked about this in one of the videos where this was a perfect Elliott wave pattern, where you could see that it's still there, 1, 2, 3, 4, 5, and now we're entering ABC patterns now on the cloud. Okay, so we're expecting this thing to go higher, and look what happened. It broke for the Cajunson, came into the cloud, came into big resistance, pulled back, came out here, and went right through the middle of that cloud right last week. So that was a perfect scenario because this is the thinnest part of the cloud. Now we're expecting to get to 59.22, which is about 100 pips away, and then we're going to see exactly what happens at that level. Okay, so if you look at the daily time frame, let's look at the daily and shrink this up a little. You could see where our level is here, 59.22, and we're expecting that to get there. You could see from the Ichimoku charts, this is ideal. The only thing that's not looking good is that the Cajunson Tinkinson are through the cloud, going for the cloud, but they've got a little more left to pop out of the cloud. So that's why we're thinking it's going to get to this level here, which will pretty much pop these guys out, and then if everything's going to equalize, then we'll have to see what happens from there. So it'll probably get to 59.22, stop, kind of consolidate, and then maybe try to retest this to see if it's going to break it to go higher. Okay, let's go look at a yen pair. Let's go look at a weekly first. You could see the weekly, it bounced off the Tinkinson line from last week, and we went below the Tinkinson. This trend is still very, very intact as far as the weekly is concerned. Okay, let's go look at the daily. Look at the daily. We retraced 50% pretty much of the big gap of bar that occurred when the Japanese government intervened. Okay. Also, look at this price action here. A lot of people look at that as being a bearish movement. Key is, remember, a lot of people are bullish as far as fundamental reasons are concerned. Reason why is the yen currency is still strong compared to dollar and others. It's going to hurt the export business just like in Switzerland. So a lot of people are bullish on this currency. So you got to wait and see what happens. But basically, this means nothing really because we only retraced 50%. This week, I think, is going to tell us everything about the yen pair there. Okay. The next currency pair we're going to go look at is one we've been recommending, New Zealand CAD. And if you look at the weekly time frame, it finally broke out of the cloud. It's got one level to beat, kind of close above this level right here, which is 75.45, and then go higher. If this thing goes higher, breaks this level here at 76.39, this is going to flip. The Chicago being an open space is going to be ideal for us. So we're really looking to enter this once it breaks 76.39, not at this time right now. Okay, so you probably got about I would say about a 50 pip movement higher, where we're waiting for it to go higher before we even look at entering this. Okay, you could see that it did break from the resistance level here. It broke out of it just a little, and then it yanked down all the way down here lower. Got all low as 74.93, and now the key question, see what's going to happen. We're thinking that this guy is going to model very similar to what's happened to Australian CAD. If you look at Australian CAD, it's taken off. We think New Zealand CAD is going to do the same thing. Look at this nice price action here. We're just now got to 92.22, and what we're doing is we're kind of expecting that guy to pretty much, it's got to the level that we wanted to get to, and we're kind of now sitting there having a very, very tight stop on that. Okay, so now this is it for the weekly video for Ichimoku. If you have any questions, please let us know. Here are my contact details. Have a good week trading. Thank you.